Well, g'day everyone, and welcome aboard. Gee, it's good to have you here on a Sunday evening where I am. This is Geoff Pyne coming to you live from Tasmania in Australia, where it is bucketing down outside, I've got to say. And if you've got dogs, you'd need double chains on at the moment because the wind is whistling like no tomorrow. And good old Australian whistler that recalled what his name, can't forget his name. I can't remember his name. And it just won't come to mind, but that's what it's like here at the moment. Absolutely whistling through the trees, and if they're still standing tomorrow, that would be an amazing thing. Thank God the bamboo will be. Look, we've got an action-packed show coming up as always, and I can hear some laughter in the background, and I know that that's coming from New Zealand, where we're going to be joining Julian very, very shortly. We're also going, and Julian will be looking at all things big picture, the macro world of the markets, and that's always a wonderful insight into what we can expect coming up in the week ahead. We'll then be joined by Alexis, who will, of course, take us through the fundamentals of what's shaping the market up at the moment, what's current, what's not, what we can look forward to in the week ahead as well. Ash looks at all the numbers. He's the numbers guy that we've got. And that, of course, comes to us from the UK. It's a truly international show today, without question. He'll be looking at the numbers, the data releases that are coming up potentially, but certainly what the commitment of traders is all about, as well as seasonal biases. We'll then be joined by Ainslie, coming back to Australia, back to my neck of the woods. She's been in lockdown for 50 days now, I believe. And I'm sure there's a few hairs been removed from her head. I can hear her chatting in the background. She'll be looking at that precious metal. Of course, we call her the golden girl. She loves to trade gold, and she'll be looking at that very, very closely. And back a little bit later with that black gold oil. She'll be looking at that one as well. Then we go to Malaysia, where we will talk to, well, I suppose the hottest topic around at the moment is the crypto world and how that's shaping up. I think I was speaking to Shukri earlier, and he just says crypto summer. I'll see how he's going to deal with that. As I say, that's the hottest topic around at the moment. Then we're going to the US, and we're going to have a look at the stock markets with Gordon. And he's got I looked at the recording. He was coming to us recording today because he's probably sound asleep, I should imagine. And I was having a look at his recording early. Very, very interesting to see his take on why we're seeing higher highs and record highs, and potentially what he thinks will happen from here. And then I'll wrap it all up with my little look at the technical charts. But first up, let's go to New Zealand, where I think it was overnight that we don't want to talk about the wonderful world of rugby. So what we will do is we'll talk about all things financial markets and the big picture on those. And we give a very, very big welcome to Julian. G'day, mate. How you doing?
Hi, Geoff. So many things to say. Yes, I believe it was the largest loss that Australia has ever suffered in rugby since possibly they invented fire. So
yeah,
there's
look, I must admit I had to turn it off. I couldn't take any more after 43 points.
They held on till half time, and then after that it was just the usual All Blacks performance in the second half. So and I do feel for you. It's been a crazy, some of the winter weather we've had this year has been absolutely crazy. I have sat there today and it's been a beautiful day, although somewhat chilly, but a beautiful day in Wellington, where I'm coming from today. So it's not from Auckland today, but it's from Wellington. So I'm on
windy Wellington. Well,
yes, I'm on the tail end of a business trip down here, and we're very excited to be here for the weekend. There's a huge amount to do in Wellington. It's an amazing party town, and we were accompanied by the weather, so it's been fantastic. Hey, look, guys, just to apart from actually thanking Anita for what I must say was a amazing rendition of West End Girls that was on the lead-in music. That was a cover version that was almost as good as the original. So thank you for that. Right. Okay, so let's get started. I've just been through, for those of you that have missed it, I've just been through my macro overview. Well, hardly quick. It took about 45 minutes. I'm going to do a 5-minute version of that here. Ainslie, I'm going to apologize. I'm going to talk about gold, but not for very long, and hopefully it won't cover the stuff that you'll be talking about with gold, because there's something important happening there in that market that I think is worth mentioning. So guys, let's get straight into it. I'm just going to share my screen, and let's get going with this, and hopefully this will work. So just bear with me. Let's go. So listen, guys. Here's when I talk about economics. This is economics 101. In order to have GDP in the economy, it is measured by consumption, which is the C word, and I, which is which means investment, and then government spending. You can guess which letter that is, and then exports minus imports. I'm going to do the best thing that economists always do, which is to assume that export and imports are constant in this. So really, why am I doing that? Well, because I just want to point out something, right? So this year we have seen a significant amount of government deficits, right? So where does that money go? Because for the equation to equal a number, right, and the same number, if you like, as always, something odd has to happen, right? So if the government spends an awful lot more than it has in the past, then what is going to happen? Well, it means that investment has to be a lot higher. It also means that consumption has to be a lot higher. So yes, you can't buy your ute at the car dealer anymore, despite your best efforts, because there's quite a few people standing in front of you in the queue. The other thing means that investment is up. So what does that mean? It means flows into the economy is into the stock market is very high, way higher than usual. We've talked about inflows for the last 6 months being greater than the last 10 years combined in the US stock market. It's no surprise. And nobody should be surprised about that, because the government deficit is absolutely enormous. Why would you be surprised? Because when you look at this equation, it all sort of starts to make a bit of sense, right? So this is me making sense of the last 18 months, if there is any sense to be made of the last 18 months. So why am I putting this up? Well, not because I want to give you an economics lesson. It's because what I want to show you is when rate of change occurs, where is it going to change the fastest? So if the government starts to ease back on the amount of money it's going to use to support the economy, it doesn't take a genius to figure out that that C button and that C character and that I character in that formula are also going to have to adjust in a different way as well too. So what does this mean? Think about it this way. Government stops spending as much money as it had, not as much money will find its way into the stock market. So on the margin, does that mean that there are fewer or more buyers? It means there are fewer buyers of stock. So what does that mean? Well, in order for a market to go down, there can be the same number of sellers as there's always been. There just needs to be a few less buyers around for them to put their hands in their pockets, and all of a sudden you have a decline. So that is a potential break point for us to watch. So keep an eye on that, guys. Right, next thing I want to talk about. So I'm just going to flick through the things I talked about with the team earlier. Because we have so little time in my little section here. I want to talk to you about gold. I believe that we are getting close to ending the second leg, if you like, or the second wave of the bull market in gold. Now, what do I mean by that? I'm not talking about this next few weeks. This is a monthly chart that we're looking at here. Why is it interesting? Well, you can see that gold's done pretty well, right? 1200 to 1700 right now isn't a bad performance over the last 2 or 3 years, considering other investments, right? Especially things that can go down that much in March of last year compared to other investments. However, it is not as good if you look at some of the commodities out there and what else is happening in the world. So what do I expect to happen next? Well, this is my roadmap for where I see the things unfolding as we go forward. This is not unreasonable, posted by a friend of mine on his website the other day. I don't think this is unreasonable. So we are in a secular upswing for gold. If you look at the 90 and 60 year cycles, haven't got time to unpick all of this, you just have to go with, right? You are looking at potential value in gold of somewhere in the region of 400 to 500% as a minimum target. So what does that mean? It means means gold goes from where it is now to $12,000. Yes, you heard it here, $12,000. But it's not going to happen by Thursday week. We're not talking about by September the 2nd, we're going to see $12,000. Maybe by September the 2nd, 2027, we may see $12,000. But what it's really saying is that over the course of the next few years, gold will continue to be an amazing investment. That's really the points that I wanted to try and get out of what's been going on. I've got one last thing I want to mention as well too. Hopefully you can see that from the charts, and here it is, right? So CPI, right? The CPI figures yet again came out pretty high in the US on Tuesday, Wednesday, I can't remember which day it was. We did CPI this week. Lots of inflation figures. Hey, and by the way, take a look at those ECRI leading indicators as well too. They were pretty worrying. They're seeing a cyclical turn down in those indicators, which is quite interesting. But what I wanted to highlight here is that when I talk about transitory inflation, this is what I'm talking about. So on the margin, right, the inflation increase was only 0.3% month on month, right? That's the key number, okay? That is not 5% or 6% year on year, okay? So that's way less than that. We're beginning to see this maybe transitory impact in inflation start to unwind already. So I thought it was going to take a little bit longer than this. We'll see what happens next. Next couple of weeks, months is going to be incredibly important for US inflation, but also bear in mind it appears to be just US inflation. This doesn't seem to be reflected too much in the rest of the world, not to the extent it is in the US. I'm not sure why that is, but just have to run with, right? So yeah, look, guys, I'm afraid that's all I have time for. Please look at my macro overview if you wanted to get any more details in this. So Helen's asking what kicks off a 60-year or 90-year cycle. Time is what kicks it off, Helen. You can go back, and we have the ability to go back and look at the gold price over hundreds of years. That's the way why they can come up with a 60 and a 90-year cycle. That's a pretty good reference point, I think, in terms of having some data. There's always other factors, Helen, for absolutely everything in the world, but why don't we just go with, from a cycle analysis wise, you're at a particularly crucial point. So yep, guys, that's enough for me, and thank you very much for listening to me. Geoff, that's me done.
Thank you, Jules. You don't escape that easily. You're in black, and I understand why you'd be in black. But the question from me is, when does, look at that, double black? That's worse. Well, it could be 10x, frankly.
Only in your mind is it worse, Geoff.
I know. Thank goodness I don't gamble or bet or invest in rugby games. That's the one thing I'm very happy about. But before I let you go, transitory, and you suggest that it's probably proving to be transitory, or that proof, if you like, is getting closer. What determines that? Where do we cross the line and say, okay, inflation is no longer a thing that we need to be concerned about?
Oh, I can see that right now. The Fed doesn't care. Okay, so the short answer about inflation right now is the Fed couldn't care less. The reason why I'm saying it's transitory is because underlying this market right now, there are some factors which is suggesting that that's exactly what it is. So what you're seeing is a slowdown in certain parts of the US and Europe, and also China as well too, that is suggesting that we're in a transitory point for inflation. Now, transitory means many things to many people, and the great thing about economics is I haven't got to explain it. I can just say it's transitory, which means it's not permanent. But what does that look like? Well, who knows? Right, and actually, I'm not sure the Fed's got any idea either, quite frankly. But it doesn't matter because they don't care. All they're interested in is the unemployment rate at the moment. That's their one key marker, and there's still loads of jobs to be needing to be created before the Fed will start thinking about doing anything aggressive, either in interest rates or on tapering. So we're a long way from a critical point. And I think what worries me is that if this is a transitory situation, and if you look at the Citibank Economic Surprise Index, I did have a slide of that, but I don't think I used it today. I'll see if I could find it actually. The Citibank Economic Surprise Index went below the break-even point today. So what does that mean? It means that we dropped below zero for the first time since March, April, May of 2020. That's not good. So what does the Citibank Economic Surprise Index mean? It means that the economy is now surprising to the downside in negative ways in the US, right? So when you look at all the different indicators coming out, the surprises are negative rather than being positive. So that suggests to me that things are slowing down, and yet again the economists may be getting it wrong, and things are transitory in nature.
Interesting. Look, I know we can't go on because of time constraints, but I find that whole conversation extremely interesting, and the tipping point is the one that I'm really interested in. Mate, thank you. We can't go on, as I said, but much appreciated. Enjoy the bask in the bloody glory, and I can't even say that. I can't even say we'll get you next time.
You get your chance in 2 or 3 weeks' time, right? There is the rugby. There is the Championship Cup left. I believe they're playing it somewhere strange. Where's the place in Australia that hasn't got COVID? Oh, hang on a second, Tasmania.
Hobart.
I'm surprised they're not playing it in Hobart at the moment, right? Because there's nowhere left in Australia that doesn't have COVID. You guys are just doing it tough at the moment, and my heart goes out to everybody in certainly in Eastern Australia with what you guys are going through. It's absolutely horrific, and I won't even bother to ask Ainslie what it's like of spending 54 days with 2 teenage girls, because I can't even conceptualize what that means. I suspect waterboarding may be an alternative option, which is slightly more pleasant. So I will.
Just not fun at all.
So there we are. And
the flippancy is out of place, I think. But anyway, we get the point. Thank you, Jules.
No worries, guys. Mate. Okay. I'll see you guys next week.
Cheers, mate. Bye-bye. Look, we've got cryptos on fire. There's all sorts of stuff going on. We've got, from my point of view, we've got a strong yen during last week. Commodity currencies did okay last week. We've got the US dollar off its recent highs. Interesting. And potentially the market's going up still, creating record highs. We'll get to that with Gordon a little bit later. And now we've got Kabul surrounded by the Taliban forces. I don't know that that's really a fundamental thing that we need to talk about, but let's talk fundamentals and go to Singapore and talk with Alexis. Hi, Lexi. You appear to be muted. I'm not sure by whom, or you've got a malfunction.
All right. Hello.
There you go. Yeah, gotcha. How you doing?
All right. Good. Great. Doing great.
What's going on?
Lots of stuff. I think I think the crypto is really blowing up, and that was really, really exciting. But we'll leave that for Shukri, and let's talk Switzerland, right? So I have been a bit more Swiss focused on the last couple of, last 2 weeks. And it is for a good reason. So I'm just going to push in a couple of articles that is going to highlight to you guys why my attention is currently on the Swiss side. Or alternatively, it's easier to say that the US is confusing the hell out of me, right? I don't know, it's going up, it's going down. Are they tapering? Are they not tapering? Are they increasing interest rates? Are they delaying interest rates? So there is a big question mark that's coming out from the US market in terms of what it's going to do next, and I think it's a lot easier to look at the countries who have a slightly clearer direction, right? So I have over here the Swiss. Basically, this is from The Economist, and it's just a brief article that was written, I think, earlier in early August or mid-July, I think. So what they are saying in a very brief overview is they are expecting GDP to grow by 3.4% in 2021. Economic recovery is predicted to be faster than those in the regional peer economies. So that got me curious on what's happening over at the Swiss side. And I have this is an inflation comparison. So these are the latest inflation stats. Let's just zoom in a little bit. Okay, so it's just an overview of inflation in its neighboring economies and where they are in terms of the latest statistics. So we have US having a bit of the highest inflation levels of 5.4%. China is 1%. The euro is 2.2%. Japan is 0.2%. Germany 3.8%. UK 2.5%. Australia 3.8%. Swiss is 0.7%. Singapore 2.4%, and New Zealand 3.3%. So what really stands out is we have the Swiss and we have the Japanese both having very, very low inflation. How does that affect them as risk-off currencies, right? And among the two currencies, then what would be a preferred risk-off currencies if you're looking at Japan 0.2% versus Swiss 0.7%? So in a very simplified simplified, I would say, layman's way of explaining inflation, let's call it the productivity, the rate of productivity, or how productive is the economy, right? So if we are looking at how so-called productive is the economy, we are looking at the Japan and Switzerland having a lot more room to move ahead of, right? Because the rest of the countries are having really high inflation already. They're having a drop in its unemployment. They're having positive quarterly rates, positive, I would say, quarterly GDP that has been appearing. So what about the Swiss? Are they lagging behind? Are they what's happening in terms of where the Swiss is going? So overall, I think last week I shared about how the Swiss is accumulating its federal funds. It's accumulating how it says, it's accumulating money at the central banks basically. So a question is, what are they going to do with the money? And I think recently an article just came out about its potential release of a, let me show you the, oh, where is the article? Okay, I'm just going to show you this article. Okay, so over here, this was in August 11th, about maybe 4 or 5 days ago. So what's happening is the headline says that it's facing a record budget deficit, but somewhere over in here, they are talking about doing stimulus. So that is what actually interested me is, oh, okay, so it's Switzerland is going to be doing a stimulus, you know, something's happening over here. All the money they're accumulating, they're going to be spent, you know, funding workers. You know, they're going to doing a 1.4 billion windfall from surplus central bank profits, right? So what they're going to be pumping money into a stimulus plan coming out from the Switzerland. So that is what I guess is a bit more interesting, because what it means is a deficit, but a budget deficit will actually mean the government spending, right? Government spending in the economy to kind of pump the economy, right? So this is why my eye is on the Swiss, and I'm really wondering how this will affect the strength of the Swiss, right? And on the other side of things, because you know I live in Singapore, it kind of interests me that, hey, Swiss foreign direct investment, right? So they're actually directly pumping money into Singapore, has risen. I think it's 68.5 billion. So it's shot up by 77%. You know, so I think the overall general consensus, not to read too much into it, is the Swiss has money to spare, right? They have money to spare, they have money to spend, and how they utilize the money, be it boosting their own economy, being growing their foreign assets, you know, that leaves, of course, the question mark. And with that, I would like to look at the charts, all right? Because I think, as Julian mentioned, in this climate, it really is more about, okay, we have a basic understanding of how the markets are doing. It's really easy to read them up, but what do we do and how do we take advantage of all this information coming out and actually try to take pips off the market? And that's why I want to have a quick peek at where are my charts. Okay, so just let me pop on really quick trading view. Okay, so let's just take a look at the charts for the Swiss really quick. I'm going to go through a couple of Swiss pairs and talk about where are they going. So Swiss yen first, because both of them are risk-off currencies, right? So risk on, risk offs, you know, and we want to see how the Swiss and the yen are doing together. So this is a monthly time frame of the Swiss yen, and you can see it actually. I have a purple line on top. It's actually hitting a resistance level, and for the last 4 months, it has not left this range. So what I'm looking at is this a consolidation? And if we look at maybe the weekly time frame, does it give us more information and tell us, are we still on the upward trend of this Swiss yen move? Is there some support level below on the weekly time frame? Is there more potential for Swiss longs? And again, overall, I'm slightly more bullish on the Swiss because of the economic fundamentals. So I'm going to be looking for opportunities for Swiss longs. If you look at the rest of the pairs, the flip side occurs. I'm going to look for Swiss for CAD Swiss, for example, CAD Swiss short, Euro Swiss short, Kiwi Swiss shorts. So technically, overall, I'm looking for potential Swiss long. So we are, of course, waiting for the setups, and we have already had maybe, I think CAD Swiss has already had five days of a pullback, and the question now is, will it be able to break this purple horizontal level I have below? And if it does, then I want to be ready to jump in. If you look at Euro Swiss, the past couple of weeks, and I'm still on the weekly time frame here, the past couple of weeks, it has been trending towards the downside. And the question is whether or not it will be able to break out of this horizontal level over here and hit further down. And again, if you look at Kiwi Swiss, and I'm still looking on the weekly charts, you can see a very this is a very clean descent. You can see it's just clearly following a channel. It's literally bouncing off a certain channel on the way down. And the question is, we have an attempt to break above this level with a weekly engulfing, a weekly train track reversal, if we call it. But then last week again, high test bar appeared. So technically, is there still downward pressure on the Kiwi Swiss? And if there is, I want to be technically ready to take advantage of the breaks of all these levels, right? So I think last week on Trading Buddies, myself and Lloyd have been spotting a couple of the Swiss pairs that they are kind of overbought, you know, on the daily time frame. So we are kind of hunting for that. So we'll go through more about that next week on Trading Buddies as well. But if you look at the Swiss pairs in general, there is some sort of pressure from the top side. The question is, of course, not to jump in straight away, but wait for the technical signals to come out. And hopefully it will catch my bias on the Swiss longs, all right, which is the rest of the currency shorts. All right, that's all I have for me, Geoff, and back over to you.
Thank you, Lexi. That was going to be one of my questions. In fact, that was going to be the only question. How's Trading Buddies going?
Oh, it's going awesome. Lloyd keeps trying to make me break my rules so that he can earn $1 a pop, but you know, so far I haven't yet. Fingers crossed I don't get tricked by him next week.
Excellent. That's a good idea. Well, I'm glad you're enjoying it. I've got to say that Ash and I are enjoying our break from Trading Buddies, but we do miss our other Trading Buddies, our extended Trading Buddies. And to those who have said hello in the show thus far, Lewis, Helen, and Dennis, my apologies that I haven't acknowledged those hellos, but this show kind of gets away on you very, very quickly. So it's not one where we can engage with you readily, I'm afraid. But g'day, guys, and it's great to have you on board. Speaking of Trading Buddies, thank you, Lexi. Speaking of Trading Buddies, here is my number one Trading Buddy, Ash, who's going to talk all about data. G'day, mate.
Hello, buddy. How are you?
Good. How's the break going?
Oh, it's going great. Absolutely loving it. Yeah, I mean, it's not a full break because I've still got a 5-year-old to run around after. So it's you know, I was going to call it a busman's holiday, but it's very, very different. But it's quite nice just to kind of get away from some charts and bits and pieces like that.
Yeah, look, it kind of clears the head a little bit, doesn't it?
I think so. Yeah, I think it's necessary. You know, I'd encourage anybody to take a break. It's actually quite good practice as well, not to trade for a little while. And you know, the way the markets are going, of course, I'm staying up to date with the markets, but the way the markets are going, very interesting. Although, you know, the S&P is on a bit of a tear, the FTSE started to break out to the upside, but volumes are very, very light. And it kind of brings me quite nicely to what I want to talk about today, which is the yen most specifically. Let me just make sure that you got my screen. So the yen most specifically is the most interesting this week in accordance to the COT data, alongside the Aussie, which I'll touch on as well. But when we look at the yen here, we can see that the short-term indicators, the 6-month index, the 18-month index, are both north of the 80% level that I like to see if I'm thinking of looking more as a bullish stance rather than a bearish stance. So it's quite the way north. The 6-month is at 93%. The 18-month is at 95%. And when we look at what's been happening over the last week as well, from Tuesday to Tuesday of last week, 11% have extended their longs and just a little bit coming off the shorts as well. This is the only fly in the ointment, the fact that the 36-month index is only at 74%. I'd like to see that at 80%. Before I would say you've got a green light really now to say that the COT data is fully in alignment and is ready to start to trust that little bit more. I'd really want to see that pushed to 80%. You know, when we start dipping below even 79%, it is just not extreme enough really to kind of say, okay, now's the time. But what is interesting is as we edge towards that September, October timeframe, when most of the big funds and the traders sit back down at the desk after the summer, what could possibly happen to the stock market? Now, I'm interested to hear what Gordon's got to say. But my personal opinion is that that September and October, it could provide some relatively choppy waters. Now, I'm not saying that we're going to get a market to crash. We may well get that correction that we've been waiting for, though. The S&P valuations are way overblown. And the one reason that I can find for people to continue to buy into the stock market is that there's really nowhere else to put your money. You know, cryptocurrencies aside, but for the general kind of investor, there's nowhere else that you're going to earn, anything like what the stock market's returns are, even though they are diminishing significantly by the week. So the yen starts to become really interesting. Now, the yen also has got a seasonal period where we would suggest a long as well. We've just seen the end of the first week of August, where we would tend to put in a little bit of a bottom before we really start to surge forward. But look, when it really starts to surge, it's around about the 10th day of September. So let's call it between the first and second week of September. We really start to see that surge. Now, that may well line up with my philosophy or my opinion that the stock market is likely to maybe hit a bit of a brick wall during that September time period. And that may also line up quite nicely with pushing this up to the extra 6% into that 80% significant value. So really for right now, the overall indication is that we could still be a little bit range bound. But there may well be some positions building into the Japanese yen. The Australian dollar is also very interesting. Now, you can see that something is happening here with the Australian dollar. 6 month at 100%, 98% on the 18-month, and only 75% on the 36 month. So 5% short of that. The shorts have diminished by 21%. Longs just picking up by 5%. If we check the seasonality on this doesn't really suggest that we get the rally until October. So that doesn't really line up that well with COT and seasonality, which is why we are pushed more towards the yen. The risk on aspect would suggest the Aussie. The risk off aspect would suggest the yen. So we're quite nicely balanced at either end of the scale, depending on people's opinion of how they want to interact with the global economy in the coming months. And if they believe that the global economy is likely to see some pressure, the yen looks to be the better place to be right now. So yeah, just to kind of summarize, mate, the Japanese yen is looking interesting. Fundamental data actually for next week isn't really focused on the yen, but there is a lot of focus on the dollar, and finding out what those policy minutes are next week, I think also could be quite interesting, and possibly we might see some easing back in dollar positions, which could push us again towards another currency. So the yen looks like the winning one, mate, possibly with the Aussie second. Is that to do with people's sentiment thinking that the yen is safe? Yeah, absolutely. If we were to see the stock market come back, then the likelihood is that that the yen would probably do quite well off the back of that alone. So the stock market is overvalued. There's no question. And if you look at some of the metrics, you can see that people aren't quite as confident at these particular levels. So it's time to be very cautious on the upside of the stock market without diving into the downside, without really quite a lot of wiggle room. You know, I'm not saying don't go short, but if you're going to go short, you're going to need a lot of wiggle room at this stage because the timing doesn't look to be lined up just yet, Helen. So I like your sign, Ainslie.
Oh, that's because...
What do you mean?
My sign, I don't have trading buddies, I have gold.
Oh, I like it. It's nice. It's even got a different colour.
Oh, a little bit of
bling
about it.
Yeah, a bit of Ainslie about it. Not very nice.
Yeah, it's not black. Oil's black, but we won't talk about black, will we? No.
Well, we
won't
not.
talk about that.
You guys just have a little chat between yourselves. That's fantastic.
Welcome back.
Sorry, host.
How are you?
Look, to be frank, I just lost my control panel, which I was busily looking to find, but carry on. We're now changing from the UK back to Australia and going back into lockdown. Ainsley, I know it's just 54 days in, but you've still got hair. That's interesting. Ash, thanks, mate. I'll catch up with you during the week, perhaps.
No problem, mate. Just on the because of the COT data is pointing towards the Aussie. Can I find out when is the lockdown in Australia likely to be lifted?
Are you serious?
We're not talking about
yesterday. The entire New South Wales is in lockdown. We've got 8 million citizens in lockdown. I think Geoff's safe, and I think parts of Western Australia are safe, but that's about it. So they've actually tightened restrictions as of 5 p.m. yesterday. We would really, really like to know when this light at the end of the tunnel, which isn't an oncoming train, will be lifted. The vaccination rate has actually exponentially increased during this lockdown, which is possibly a good thing out of all of it happening. But when it's going to lift, don't know. They said 2 weeks after 3 weeks of school holidays, Ash. So that was 3 weeks ago. So we were in lockdown for 5 weeks. And kids sort of rolled school holidays into the first 2 weeks of school, and then it was like, this is serious, and now we're halfway through term. So there is actually talk that the girls won't even go back to school this year.
Okay, well, avoid the Aussie right now.
If you could block your ears for just a minute, I'll add my opinion to that. I think New South Wales is out of control, and the reason I say that is because there's still so many cases out in the community. I think only vaccination can save New South Wales at the moment, and until that gets to a reasonable figure, and the vaccination gets to a reasonable figure, 70%, they're talking 70, 80%. I think New South Wales has got real big problems.
Yeah, we're screwed, basically. So what they've actually done, actually give you an indication of how serious they're now really taking this, is that they've got the military deployed. We can't even leave 5 kilometres from our house, and we can only go out for exercise, to shop. One person can only go out and do shopping and medical appointments or essential work. That's it. Right. So okay. 5 kilometre restriction. It's a bit tough. It's tough going, knowing that you are so limited, but the vaccination is really important, and the fact that we still have so many people, and this is why they've deployed the military now, because we're told every day we're told, stay at home, don't go and socialize, this Delta variant is just wicked. It is just highly transmissible, and every day they've got 50, 60 people that they can trace, they contact trace. We've got a really good contact tracing system. 50 or 60 people, just, the rules didn't apply to them, and they go and affect 5 or 6 people in their home, and oh my goodness, I've, infected my kids, my family, or whatever. And it's just, which bit of this are they not getting? Sorry, I'm off on a tangent because it's.
I'm going to say
really,
the Aussie does track gold a little bit. Is that postpartum? Is that about to change?
So sorry. Look, it just follow the instructions. It's not that hard.
Thanks for the update. I mean, it was just a really sort of it's just extra help actually to know which currency pair would be a better one. So it looks like the yen. Point to the yen.
I'm actually going to refute all of that when I do my analysis. So. Someone's going to be right.
So Ash just asked a really simple question, and then I just went, Burko. Never mind. This is what staring at 4 walls will actually do to you. Let's have a little look at gold. My goodness, after consolidating for a couple of weeks there, all of July basically, when it was meant to be rallying and it didn't, and we came in and hit this 1830, 1832 level, and it got rejected 1, 2, 3, 4, 5, 6 times. Finally, we had a bit of it. Just flop over to go away. Flop over to the 4-hourly chart. You can see that back. So I'm going back prior to NFP. So we're going back a week and a half. ago, and we had, what was that? And then we had bad ISM. So we had bad ADP numbers, and then an hour and 45 minutes later, we had great ISM. So why I'm saying that is that one pushed the bad ADP pushed the US dollar down, and we flew up on gold, and then the ISM pushed down. And then we just sort of drifted down, and then all of a sudden we had this almighty fall off the cliff. And I'm just going to put my crosshairs here where the green cursor is on my 4-hourly chart. That's where we closed on after NFP. So we had really, really strong NFP numbers, and we had this push up on the US dollar, and then we had this horrible, horrible situation where the strong support level of 1790 95 got broken, and we came down. That level there, by the way, is, and I know we've been tracking it a little bit on the weekly chart, which is exactly, it landed dead set on the 0.5 retracement, Fibonacci retracement. So we're tracking that big bull flag on the weekly chart, and then we had this movement down, and it came straight to 0.5 retracement Fibonacci level. Monday morning opened. Here's Monday morning. Holy moly, look at that. Now, down this little bottom area, what did we hit? We hit to the T was the 0.618 level. So that move, by the way, unless you were thinking very optimistically and you were going short, didn't close off your position on Friday night, and you were at your chart as soon as trading opened, and in a couple of minutes, it flew down. It dropped, it was about 4.4 something percent, just over 4%. It dropped in a couple of minutes, bounced off the 0.618 level on the fib level, came flying back up, consolidated, and then just really couldn't decide. And then obviously with the US dollar falling off its perch last week at the end of trade Friday, we had a push up, excuse me, had a push up on gold. I'm really, really upset that Julian's saying that gold's going to go to 12,000, just not by Thursday of next week. Very upset with that news. However, what we do have on the monthly chart, and you can look, you can see here, we've got a huge move down and then a pull straight back up again. What we have done here, we have closed at 1779, let's call it 1780, rounded off. But one of the critical levels that we had to clear was 1760, which is a key level over the last 12 months for gold. It's 1760. So we've cleared that. We're up at 1780. Our next little hurdle is to see if this is going to be, if we're going to maintain this upward momentum, like that would be nice, wouldn't it? Instead of this roller coaster, as opposed to absolutely nothing. It would just, if it would just go up nicely in stages, that'd be great. However, we've really got it. We're going to come back into this level, I would say, into early next week, which is that 1790 to 1800. That is our next hurdle to come overcome. So what was strong support, which is broken, is now going to be tested as seeing how strong that resistance is. Once we get through there, we've got to get through the monthly pivot and then the 200 simple moving average. So we have got a lot of uphill battling to go to actually start to clear. Once that's done, 1830. Once we clear all of those, Geoff, I think we're looking good to the upside. Not to 12,000 though. I would
piece of cake, right?
Piece of cake. That was just, hold on to your hat, Harry. That was just
perfectly technical. Was the bounce point though? You would think.
The bounce point was, I couldn't believe it. Hang on, I'm going to see if I can just tell me if you can see this. I'll just try and shift that over. Can you see that? A weekly chart? Or does it need a new share? Yeah?
No, I can see.
Yep. So what we've got here, look at this for a beautiful technical setup, is hello. So this is the retracement that we're doing, the bull flag, massive bull flag, by the way. And look at it here. straight to 618. The previous week with the NFP, click 0.5, a textbook. And then we've got this massive hammer. We've got a low test bar. And that's what I would really like to see, as well as bouncing off this level, serious level. This is on the weekly chart. Look at that. Look at how that's been respected the whole way through from March this year, all the way through. So interesting times there, Geoff. I would like to see it obviously take advantage of that low test bar and keep going north, but whether it will or not, I just don't know, because what we've got to rely on is the US dollar continuing.
I actually love, yeah, right. I just laugh when anybody says that. What I see there is the potential for a bull trap. And if we came back to retest the top of your channel with another lower low,
yep,
I think that would be a lovely buy point down there.
It would be a lovely buy point there. But as I said, look at this. 1, 2, 3.
Yeah.
4, 5. This support level's really held. Really, really held.
Yes.
So yeah, I know what you're saying.
That's what I think. Yeah.
I know.
We shall see.
Betwixt and between at the moment, because it's got to go somewhere, because I'm really over it just going sideways. As you know, I don't imagine why when it goes sideways.
It's like your life is on complete hold, isn't it?
Oh, yes.
All right, listen, we better move on. I've managed to get us 21 minutes behind schedule, so
excellent.
Okay, let's move on. We'll catch you very shortly, actually, with some black gold.
Yeah.
Let's move from the shiny stuff to the hot topic, I suppose, of the week, month, year. No, not the year. Is it the year or the decade? We seem to be coming into a crypto summer, do we not?
Yes, we are. The DeFi summer is coming back. And just like Ashley showed 5 bottoms, I will show you 5 again. 1, 2, 3, 4, 5. I don't know how you count this. I think I asked somebody just now, what is this called? We have 5. Quintuple bottom. Geoff, don't make this a bottom. I don't know what to say at 6, okay? I do not. My English is not powerful enough. I don't know what a 6 bottom is. Do you know?
Sextuple.
Oh, sextuple. I learned something here. Anyway, we're back to our greed now. So just look at the fear greed index. Once we go to 80, we might have a correction. And then it's only up here where we get problems. Right? But we could hang about. Let's see where we are in terms of charts. I'm going to show you another view of the charts today. We have not seen this in a long while because it wasn't really worth it, but we're going to see it today. This is the CME chart of Bitcoin, okay? And this has the gaps, the CME gap, because these markets do not operate during the weekends. They fill 90% of the time. And voila, look, it comes back and is struggling here. This is super. Once it breaks here, where is the next gap? Around here? There it is. There's not much space between here. I think we struggle a little bit here, which is good. Or we hit 50, we go down, we head back up. This is something of concern, that if it goes down, it looks like it might fill this. But this, I think will happen next year. You know, because this is like the last hurrah to the moon or whatever it is. Okay, so looks beautiful. Another thing is Ethereum is back. But Ethereum is not my choice for the coin of this rally. I will tell you what my choice is. It's our good friend, Geoff. Now look at this. Ethereum is going up because why? And I'm very bullish on Ethereum because why? The Ethereum is being burned. People are back. People are doing crazy stuff. We thought that EIP 1559 would reduce the gas. It doesn't. All it does is that it basically burns Ethereum. So the more people pay, the more Ethereum goes up. Kind of weird, right? This is good because last time, like, the more people pay, the more people pay. Now, the more people pay, more Ethereum is taken out of circulation. Geoff, look at this morning. This was kind of like an IDO for an NFT, not crypto. Look at the gas cost. $7,857. I ran out because I did not have funds to do that. This costs only
Sorry, but that's ridiculous.
I know. People are back into risk-taking mode. Many people got burned this morning. I was looking at the group, right? Okay, guys, you guys are not good. Now let's see. What is the best of this thing? This is my pick. This is my pick. Listen carefully. And even for Crypto Moon 3, we're going to design it and around this. It is ADA. Hey, where is Ash? It's ADA. I think Charles does good. I think this eventually goes to 5 at least, maybe to 10, but call it 5 first. They have finally committed on launching the smart contracts. Okay, that's one. But what I do like about ADA, there is a call here for ADA. You know, when you talk about Dogecoin, last time, like they were supported by this dude called Elon Musk, which now the crypto community hates. So he tries to shill or push Doge, nothing happens. We are now fully behind ADA. And just like Doge had Doge $1, ADA has this. Flip Ethereum. I don't think it happens. I don't think ADA will flip Ethereum. It's now number 3. But through this movement, I think people are going to start rallying around Charles Hoskinson. I think this will be the leader in this summer rally, okay? Look at this. This is CoinGecko. Look, BTC has gone down from 45 dominance to 42. Very good. That's why the small coins are moving. And Geoff, it is now number 3. I am glad that we made peace with Charles Hoskinson. Geoff, it is time to rally behind him. That's what I have.
Look, hands up, everybody who waited until ADA went back to the bottom of the range before they bought it.
I know, I did, and it's good. See, we're strong guys. Even I was in the class.
No, hang on. I meant the next time.
Oh, the next time, okay, yeah, because
it's gone. Okay. It's gone. So no good to me. But good luck. Good luck to everyone who's on board ADA. Thank you, buddy. We'll catch up with you. Actually, I won't catch up with you during the week because Alexis and Lloyd will.
Okay.
But that will be in Trading Buddies. We'll catch you next Sunday as well. Thanks, mate. Okay, from the shiny gold through the cryptos back to the black gold. What's going on with oil?
It's less exciting this week than gold, I've got to say. So let's just have a look at the screen and have a look at these charts. Look at this. Look, oil's at that point at the moment. It's not too sure exactly what to do. It doesn't know whether the Delta variant is really truly going to upset everybody and stall a few things, or whether it's really taken, or whether it just doesn't know what to do. It's been all over the shop. It came down, it went up, it went sideways, it went up a bit, went down again. It's betwixt and between. It really is. Again, we've got some very nice technical setups. We've got a double bottom coming up in that's happened here on the daily chart. We've got divergence happening on the MACD. However, ADX is telling me it doesn't know what to do. It's going sideways. We had concerns about the Delta variant, and what they were looking at in particular was China actually closed one of its busiest ports. So China is the largest importer of crude oil. It closed one of its main ports. It's looking to close and shut down again with the Delta variant. You can see here during, Tuesday and Wednesday of this week, we had very much we had a bit of a rally when it came back up again, but it was very much again bouncing off this strong level of support. After it's bounced off, it came down and clips this double bottom area that we saw back in July. But it was also pushed back up on news that we had a couple of things in the mix there as well. One was India. Their pre-COVID levels of fuel and demand for oil also increased, and those results came out on Wednesday. So we saw this push up in oil because India was saying, well, actually everything's good, everything's looking good again, and there was this optimism. And then the Delta variant, and then there was also just right before the CPI numbers, month-on-month CPI numbers came out, Biden on Wednesday suggested that OPEC increase their production to deal with the opening economies. It's also, you know, I think it was a bit of a red herring to take away from the CPI numbers, which weren't fantastic, obviously, but, you know, the other thing was the $1 trillion signing of Biden's infrastructure. The Senate passed it, sorry. The Senate passed the $1 trillion infrastructure bill on Wednesday as well in the state. So that also puts a lot of pressure on the demand side of oil, which obviously if the supply side is not doing too flash, it's going to push up oil prices. Now we're not too sure what we're going to see here. So a lot of confusing information coming out in the marketplace, and all I've got is oil going sideways, which is not really like oil. Oil likes to pick a direction and tend to take the bit between its teeth and fly, but we haven't got this at the moment. And I think there's still a lot of concern with the Delta variant, how far this is going to push on, as far as let's look at China, let's see how that goes from here and where it pans out. So at the moment, I have no fantastic direction. I'm just sitting waiting because we've had a week and a half of consolidation or just going sideways. Yeah, so sorry, Geoff, I've got nothing fantastic other than a mixed bag of fundamentals, which we all know oil loves to rely on, not giving me.
I'm going to say it's a fickle beast, is it not?
It is fickle. It's not normally fickle, but just very fickle at the moment. We're just chopping around in the middle there going, we're just not sure.
There you go. Not sure. What do we do?
We've got a not sure.
Jack.
Yeah.
Jack, we'll do Jack. Look, thank you so much, do the best you can with what you've got, right, in Sydney, and I do feel for you, and I'm sure we all do.
Yeah, we'll get out of this. We'll be fine. It'll be good, and then it'll be, I mean, spring's a couple of weeks away, and then we can, you know, we can't complain. We've had some really great weather, just can't do anything with it, unfortunately. But it's not cold.
Spring's on its way. That'll put a smile on everyone's face. And I won't go there.
Yeah.
Okie dokie. Let's get off the oil train and get into something that I'm a little bit passionate about myself, and that is the relative strength of currencies, which Lloyd is very, very apt at exposing for us through his look at the relative indexes of the major currencies. Lloyd, what can you see, buddy?
Hi, I think Geoff. Okay, let's go through the currency indices. Last week we didn't have it, but during the trading buddy show, I did share with them that overall it seems that more reversals are coming up, and during the show we did nail a couple of reversals, as Alexis have shared. Yeah, just to clarify.
Good show, that trading buddy.
Yeah, I mean, I had absolute fun in trying to tempt Alexis to trade what she's not supposed to trade, but.
Oh, I'm going there.
All right. So first off my list is actually the Euro index. So you can see that price is fluctuating very, very nicely within this band. And actually, I can't find anything strong other than anything stronger than that. Yeah. So this is really reversal trading at its end, because I can't find any trend strength in other pairs. Yeah, so in lieu of that, the Euro index looks good for a long shot. Yeah, it's just that, because it's bouncing within two levels, so I got nothing more to elaborate. Kiwi index will be my second choice. It's not as clean as the Euro index, but really we can see this is happening. Yeah, so again, the 70 levels are really strong level to be holding strength, and we can see that price is really hugging this. Yeah, so I can envision that Kiwi will be strengthening in the next 2 weeks ahead. The rest of the currency, pound, is really iffy. Yeah, it's still within a range, but since that it's not at the extreme end of the range, then I don't really feel inclined in trading it. Same thing for yen. It is really just in the middle of nowhere, so it's really tough for me to trade pound and yen. Now the Aussie index will be a bit more interesting. Yeah, it's really, as of 2 weeks back, you can see that price, ever since I draw this level, price is still hugging tightly in this level. Yeah, that's why I place it in the middle of my list. It looks as if we want to go short, but I still don't have any conclusive evidence that it will go short. Yeah, so it'll be tough trading pound, yen, and Aussie for next week ahead. Now, the Canadian index will be interesting to me. First thing, this is still an uptrend. Price has, it still looks as if it's uptrend, but you can see that since 2 weeks back, even 3 weeks back, price is hugging $80 quite nicely, and it is showing signs that it is weakening at this level. Yeah, so we may be in for a cat weakness. Yeah, so that's the part whereby I'll be really amped up to actually short oil and cat and its relevant currencies. Now, Swiss, I'm actually holding a different opinion compared to Alexis, because from the currency index of Swiss, price at 110, price fails to hold this level, and then it looks as if we are in a channel. Now, this channel is still not fully established yet, but since that price comes holds at 110 and is being rejected very nicely at least at the top end of the trend of the channel, I do have sufficient belief that price will actually weaken instead of strengthening. Yeah. So for the coming week ahead, all price needs to do is actually to continue its breaking its open or close of last week candle. Then I will still be happily shorting Swiss. Now the dollar is in a very, very similar situation as euro. So you can see that these two are actually the opposite flips. So euro is at the bottom of the range, and DXY is actually at the top of the range. Yeah. So it looks as if the euro and dollar works out, then we are in a very, very nice. We'll be in a very nice trade for the upcoming week. Yeah. So as of now, DXY, I'll be shorting it according to what I've seen so far. Yeah, it is at a very nice resistance level. So euro dollar, again, this is what I envision that we possible to trade. Yeah. So incidentally, during the trading buddy, we actually caught this reversal. Yeah. So price is still upwards. I've already scaled off this trade already. So I'm looking for another entry to long positions. Yeah, so these are two possible moves that I'll be looking for in the upcoming week ahead. Kiwi Swiss is also another trade that I'll be looking to long. Yeah. So this will be a weaker trading setup compared to euro dollar, but it's still worth keeping a lookout for, because on the daily time frame you can see that Kiwi Swiss, it has broken out of this downward, almost breaking out. Sorry, it has not broke out of this channel. Yeah, almost breaking out. So I'm anticipating that it will. So we'll see. Keep my fingers crossed and see what's going to happen. Right, so that's all for me, Geoff. One thing to take note is that both of these trades is not the usual trend trading setup that I aim for, but it's really still more related to from a daily time frame perspective, these two are still more of a reversal trading setup.
Cheers, mate. Interesting analysis on euro dollar in particular and the yen. I'm going to take a look at both of those in my analysis very, very shortly. But before we do, and thank you for looking after our trading buddies. I hope everything's going well in that show. I'm sure it is. No question. Let's turn our attention, however, to the stock market. And yet again, the US S&P 500 has created brand new highs, all-time record highs. I wonder what's going in the week ahead. So let's check in with Gordon to see exactly what is going on and what he thinks of the week ahead. There is a recording of Gordon coming very shortly. How are we doing with that, Anita? Is that coming up? Going okay?
Hey, Geoff. I'm trying to share it out on the screen, but the window's not showing up. So let me just see if I can minimize that.
Okay, yeah, look, just take your time. All good. Do you want me to give you a few minutes? Oh, there we go. There's Gordon.
Hello, everyone. This is Gordon Scott doing a weekly update. I want to be able to give you an update of where the markets in the U.S. are going next week, and I can do that in one chart. That's the chart I'm showing you here. This is a comparison of a equally weighted portfolio between Apple and Microsoft. The price of Apple is doubled compared to Microsoft, so that the weightings are 50-50 or pretty close to. I'm comparing that two stock portfolio, which is the candles represented on this chart, with the lines. The red line is the NASDAQ 100, and the greenish line is the SPY, or S&P 500 ETF. What you're seeing is the fact that compared to about last April, when the markets were generally having a bit of a downturn, the Apple Microsoft portfolio went below the indexes. But right at the beginning of July, second fiscal quarter, probably not a coincidence, they shot above the indexes. Right now, they're breaking out. The Apple Microsoft portfolio is breaking out to all new highs. And so what that means is that the core of the indexes is ready for new highs. And it will probably lead the indexes up to new highs as well. That's because Apple and Microsoft are literally 40% of the technology sector. XLK is the ticker symbol for that. But of the NASDAQ, the two of them combined are over 20%. So there's no other stock that's even half as influential as Apple and Microsoft, and certainly not Apple and Microsoft combined. You would have to take the next 5 companies down: Google, Facebook, Amazon, Tesla, and Nvidia. I'm not sure who would be the next one down, to even begin to come close to the influence that these two have. So when they go one way, they're literally the ring around the nose of the bull market in the US stocks. When they're going up, everything else is going to go up. And they're going down, everything else is going to go down. Now you can see they can get some aberration going. It can be the case that they go a little too far. In the middle of May, both of them were down, but the rest of the market didn't want to follow them. And it may be that the rest of the market wants to turn down, and Apple and Microsoft are left up on a cliff all alone. That's possible, but I kind of doubt it. Under the current circumstances, if people were over-speculating, then you would see stocks like Tesla and Virgin Galactic running away with new highs. That's not what we see. We see plain old Apple and Microsoft, the two heaviest hitters, the ones that it takes the most money in order to move them up to new highs. They're hitting new highs. This is the market's way of saying, we just want tried and true, trusted stuff, but the fact is we got money and it's got to go somewhere. I remember a story years ago that a guy told me. He was the pension fund manager for General Motors. $1.3 billion, he had to find a place for it to sleep every night. That's the way he described it to me. 13-hour days, that's the amount of time he spent in the office, plus, well, basically around the clock, people calling him and haranguing him for whatever. I mean, you know, you're the pension fund manager of one of the biggest manufacturing companies in America at that time. He got out of it and started a toy store, literally a little specialty toy store in what happened to be the town where I lived 10 years ago, and that's how I ran across him. But he said we would get money coming in, new money all the time, and we didn't know what we were going to do with it. We thought we had put all the best money in the best investments. Putting more money at them would make them less good investments. But what else were we going to do? And so we did. We bought stocks at higher prices, and just kept our fingers crossed. That's the way the game gets played sometime, and I think it's safe to say that's the way the game is getting played right now. So what do you look for? you look for not quite blue chips, but the next most solid thing, and yet something that has a growth story attached to it. That's probably where you need to be looking for, good opportunities. And but at this point, I don't think it's going to matter. At least for the next 3 weeks, maybe month or so, we'll just see the U.S. market continuing to go up. This is really interesting because you see, the VIX is going up as well, or creeping up, and the VVIX, the volatility on volatility, is going up even more. It did that right before COVID. I think everybody's very concerned about the Delta variant, that the cases are expanding. However, if the Delta variant, it's not like nobody knows what it is. It's not like somebody's uncertain whether it'll have impact. Everybody knows what COVID is. Everybody knows what the Delta variant is. Everybody is aware of the latest headlines. If they were worried about it, we wouldn't see Apple and Microsoft making new highs. The fact that the combo of these two is at an all-time high is the market's way of quietly saying, I don't believe you, to the news about COVID. Believe me or not, I think the markets are going higher. That's the market insight or wrap up for this week. Hope that was useful for you. Gordon Scott, till next week.
Awesome, Gordon. Thank him very much. Obviously coming to us as a recording because I'm pretty sure he's sound asleep. I might be getting up. I know it's getting towards Sunday morning, so perhaps he's getting up to have a cup of tea in the next little bit. All right, so it's my turn. Let's talk about what I see happening in the markets this week, and hopefully you are now seeing the right screen. I've got screens all over the place. I'm going to start with Aussie yen, and we spoke about, or a couple of people have spoken about the Aussie, and a couple of people have spoken about the yen. From my charts perspective, and this doesn't take into any consideration what Ash was talking about or what Lloyd was talking about in the indexing, but what it does show me is completely the opposite of what both of those indicators that both Lloyd and not necessarily Lloyd's technical analysis, but the COT data and the seasonal data is actually saying, and that kind of gives me a bit of a joy, because it means that, to my mind, I'm on the opposite side of the track, and I like being on the opposite side of the track. So what I see technically is pretty compelling to me, actually, because I see the biggest picture here as a potential, well, it's a massive double bottom. I'm on a monthly chart here, right? And in 20 years, 30 years' time, potentially we'll look back at this and say, gee, that was a good double bottom. Maybe we won't. Maybe it's not going to be a big double bottom. But then I see this inverted head and shoulders sitting here, and I see it coming off a strong support level. We're going back to 2008 global financial crisis in here, right? And since that time, we've been in that range on Aussie yen. We broke back into that range. I don't know that we went to the top of that. So if I'm, technically me, I'm saying that's the top of the range. This post global financial crisis range. Yes, we've been below it many times, and you could certainly extend the bottom of that range down to there, and that's fine. It doesn't change the case that I'm using, which is we are back on the road to the high side of that range. So for Aussie yen, technically, I see a big break of that resistance trade line. I won't call it a trend line because it's not. I see the inverted head and shoulders. I see the neckline of that broken and retested here. And there's the channel from which we emerged out of that inverted head and shoulders. And now we're retesting the confluence, which to my mind is a really, really nice place to find something to trade. Now we're talking about the monthly chart here, right? And the next thing that excites me a little bit is this bar here. So 4 weeks ago, we got a key reversal bar at that exact level that I'm talking about. And since then, we've had inside bar, inside bar, inside bar. You can see there that I've actually traded this long on the smaller time frames. We made a little bit of money out of that, but the trail didn't work so well. The trail got stopped out. Let's put it that way. And so we didn't make too much money out of that. Yet I see this as the dominant player at the moment. This doji bar sitting here, and as I say, since then we've been inside. So I'm expecting this to explode at some stage. Now the question, of course, is where's it going to explode to? Is it going to explode that way, or is it going to explode that way? The fundamentals and the commitment of traders would suggest that we're going down and back into that range, and I'm okay with that if that happens. But at this very point in time, I think we're still above that level, and I'm not committed to a short at this point. This area here, I'm now back on a daily chart, will, to my mind, give me exactly what I need to know. So if we can hit that level and not close below it, I think there's a buy on. However, if we come back below that level and retest it, then I think we've got to sell on. I know that's a long way around where I'm at with this pair, but that's exactly where I am at with this pair. We're coming off a, pardon me, potential reversal here. That's a 3-candle pattern. I think it's called a morning star for those of you who want to follow candle patterns. We've since put in a higher high, a higher low. We haven't matched that, or we haven't beaten that higher high, and we've gone into range here. But again, I think this level is crucial, and I'll be watching that like a hawk in the next week. It's around about 80-60, the 80-50, 80-60 area. It could take off. We could fill that range, so we could bounce back off, or we could get, as I say, below there and go south. Not committed to anything yet, but I think this is a great place to look for a trade, frankly. Second one I want to look at is Euro Pound. Now, Euro Pound, I have been trading short for some time, and I withstood the temptation to actually take everything off the table at this point. Or those who follow my trades would have been aware that I did say, if you want to get out here, get out here. But I felt that the bigger picture was that the bottom of this technical range, this box range here, was my target area. And there was a beautiful confluence of the bottom of that channel that I just looked at, and of course the bottom of the range as well. Look, I'm still of the opinion that that could happen, but my trailing stop has now been hit, and it does look from a shorter term point of view that we may head to the top of this range before we go back to the bottom. So I'd have to be a buyer of Euro Pound at the moment. The daily chart is suggesting that last week's weekly pivot has been eclipsed. I'm not sure how I can find a way in here, frankly, until we get a higher low. And that could very well happen. You can see the level that we're potentially bouncing off here, recent support area. Weekly pivot last week, as I said, a lovely little bounce off that area would be perfect. If we can put in a higher low here, I think I'm a fan of trading Euro Pound long, maybe back to that vicinity. I would have thought around about the 85-50 area. I think that would do me for Euro Pound. Then I'll be looking for shorts again. And the last is going to be Euro Dollar. Now, Euro Dollar we've spent a bit of time on during this session. And of course, it's my favorite pair to trade because it's the most traded thing on the currency board. So what do I see here? Well, completely mixed once again, but I think that there's a great area that we're at right now where we're going to find opportunities. Now, I've been harping for weeks on this potential false break. I mean, a clear false break of that resistance trend line. And it's still setting up. In fact, price has got very close to that level. You can see the break of that resistance trend line. You can see the re-entry back below it and the retest of it. As I said, we've been speaking about that for weeks. Yet I've been very, very reticent to actually take that position. And the reason is I think we're now going into, and we are in, frankly, in my humble opinion, a range that may last for some time. And that exists between the 117.50 area and the 121.50 area. So I think we're going to hang around here for a bit. before ultimately this will fall away, in my opinion, once again. Now, this week, I see an opportunity to trade this long, and this coincides with Lloyd's analysis on the indexes. What I see is this strong support level that we've been hanging around for a little bit, and that's the weekly chart I'm looking at. We've got a key reversal bar on that weekly chart at that very level, and we have closed back above this trend line. So it's a key confluence area. I think it's very, very appealing to trade euro dollar long this week. Now, last week's weekly pivot has acted as resistance. There's not a huge horizontal level through there, but just like I was talking about on euro pound, I think if we can get a higher low in here somewhere, maybe off that 117.50 level, then I think this is a real good opportunity to buy euro dollar. Now, I know there's a fair bit of dollar strength about the place. It has come off its highs last week, no question. Maybe that's a retracement, maybe it's not, but I do think a higher low in here on euro dollar gives us every opportunity to trade this long. To where? Well, that's a good question, because I think ultimately I'm bearish this pair, and I've shown you that bigger picture where this level here, exactly the level that we're at, will eventually be broken. The best place to trade that from, of course, is up here somewhere. I think the next level, and certainly the level I want to be taking profit at, is in this vicinity, right about there. So just below 119. I don't think I'd allow this to go through 119 at the end there. There's 100 pips up for grabs, in my humble opinion, but you need a higher low to trade. And that's pretty much where I am at for this week, as far as my 2 cents worth. Okay, guys, that is there for the show, and I really appreciate your company. Thank you to all the presenters who offered their opinions on the market upcoming this week. Hope you've gained something out of it, and we look forward to doing it all again next week. Thank you very much to Anita, who has stepped into the breach tonight, and I'm sure is very relieved. She may be having a quiet drink as the show concludes. Thank you, guys. Enjoy your week and keep safe, everyone who's affected in that COVID situation, and trade well. See you later. Bye-bye.